So tonight's webinar is live Forex market review. So let's get into it. If everybody can read through the disclaimer. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us in the webinar. I'm giving you the link. For those in the webinar, you can use the chat box or the Q&A box to talk to me. So I'll just give you a moment or two to read through the disclaimer before we move along. All right, we'll move along now. If you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY and I am a full-time trader. I've been trading now for almost 20 years in the Forex market, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. And through the week, you can connect with us at the website. Go to acy.com, go to the market news tab, or on our YouTube channel at ACY Securities Australia. And if you want to connect with me personally, just head over to my Linktree page. You get my links, my Linktree page handle there. If you want to get access to my chart layouts and templates for MT4, then just contact Nathan.bray. His email's there on screen, but I'll put that in the chat for you. Just contact him. He'll be only too happy to help you out, set you up. All right, that's in the chat. All right, let's just kind of have a look at the news before we get into the charts. Of course, this week we've had inflation data from the US, which has meant a weaker US dollar after the data releases. CPI yesterday was either on print or fractionally lower than expected. So does that now mean that, yes, inflation is fully under control? I don't know. I think it's too early days. I think we've got quite a large reaction to the upside on pairs to the US dollar, which I don't know if they can really hold that gain. Data is still well above the 2 to 3% where the Fed wants. All right, so next news item for the day is tonight's US unemployment claims at 10:30 p.m. That's New South Wales time, Queensland time. And that's the last red calendar event for the week. So that's the last one that can really stimulate the market. All right, with that in mind, let's get to the charts now. This is the dollar index, just to show the picture. This is actually the range of last month from this low up to high. It's actually still holding to an uptrend here on the weekly chart, higher bottom, higher top. And, by the end of the day, this 79% level retracement area, if we close back above this area today, so we get a reversal candle today, it wouldn't surprise me to see this start to come all the way back up the range. There was a big candle here. There's some form of imbalance in here that day, and it's pretty much filled the whole imbalance. So then that being said, we may well see this start to move back up. If we break this low here, then things could be very much different, but at the moment, we're not breaking that low yet. All right, so that's what you need to bear in mind. If we do get a good close above pretty much 104.949, back above the 79% level today, we could start to see a move back up the range. And that means pairs to the US dollar moving back down their ranges where they've been moving up. Now, with the weaker CPI data, the S&P 500 has moved to a new, fresh all-time high. Overextended. So anything that moved up yesterday, where it's a currency pair, is overextended in the short term. Yes, we can keep moving up, but what I would be looking for is, that's the most immediate range on the day chart now, just here, is looking for a pullback. If we keep moving up, drag the fib up and look for the next 62.79% pullback. So you're looking for an area to buy a dip. At the moment, do you want to be buying right at the top of the market, at the all-time high? Yes, we can have another 1 or 2 days up without pulling back, but you always want to be trying to buy a dip. So wait for a dip there. Trends are quite clearly up. Okay, now let's get into euro dollar. So this is my day chart. This is the high of last month, which we've traded above today, but you can see on the current candle that we are negative for the day. And are we simply, we traded all the way back. So that was the high of last month to the low of last month. And we traded all the way back up to the high, just false breaking it a little bit. Of this range, high to low, we've just been a fraction short of the 79% level. And while the day chart trend is up, if I draw it in here, we are very much overextended. You pull back and we'll be on the 127 extension. There's the 162, which we don't often meet. So we're definitely in an area right here where we could top out. It's not where I'm just going to get long. If we're going to continue the uptrend, I'd want to see a pullback maybe to this area. So 108.11 back down to the 1800 area for that to be support. And then this would be the area that I would look to get myself long. If, I thought, okay, if I thought we're going to come up to here long term, I want to see some form of pullback. I'm not just going to buy the top of that move at this resistance area here. So going to need some more information, but we could top out here for, this is the bigger range at the moment. Just being short of the 79% level. So over the next few days, we could tag that level and then still reverse, or we might top out today to trade down. So that could be the long-term picture, even though I know we've been bullish this month. We could false break the high of last month and then totally reverse back down the range. All right, so just want to drop down time frames. For our trend's still up here, but of course we're not able to hold that high. And you may well just be very bullish and you don't think we can reverse down from this area. So I think we possibly could, but there's two sides of the market. Here's the central pivot point for the day at 108.63. We could just simply come down to the central pivot point today and test that level. And that could be the support area for the day at the central pivot point. And then we might see a reversal back up and off we go. All right, so what side of the market are you on right now after yesterday's strong move up? Are we going to be reversing back down the range, or are we going to continue above that 108.84 level? Personally, I'm not sure. What I know is if we, over the next couple of days, test the 108.84 level up to the 109 level up here, and we don't make any more ground, then there's a high chance we're going to top out. So I'm probably leaning more on this is a topping out area. And I'm just going to be watching to see how today finishes. So back to the day chart. If today finishes with a very nasty reversal candle, then I would probably start to look for an opportunity to get short. So I'd look on the 4-hour chart for some structure to change. So if we get a very negative close today, I would look for this to maybe come back up and start to form a lower top on the day chart, or start to see a negative rejection up here on a rally and then look to get short. Now, I don't have that at the moment because after yesterday's massive move up, I'm waiting to see if that reversal can come around. But I am aware of there is an imbalance here that got formed Tuesday. And the market may want to come back and fill this imbalance here. The imbalance that got formed yesterday on this candle did get filled, but there's one in this area here. So market often comes back to the imbalances formed. So there is one there, and there's actually still one in here that hasn't yet been filled. So the market may want to come back to these zones after being highly stretched to the upside. More in favor of that occurring, then we just continue up. Okay, so make a decision about what side of the market you're on, but I think we might come back up for a retest and failure up at that 108.84 level. That's what I'm watching for. Now, Euro Yen, I did say on Tuesday, waiting for a breakdown of price action to the downside, and we certainly have had that. So difficult to determine just quite, do I draw my fib for a rally now on this 4-hour downtrend that's starting to form from final high or this little minor high in here? What I did notice intraday today at the moment is that we've come back to the 62% level of that high point to low. So that could be the rally point intraday at the moment. So that high down to the low. And it's just pausing at the 62. So you might want to decide, do you want to get short there? Personally, I would much prefer to see price come to the central pivot point in the 79% area up here. So the central pivot point is at 168.41, 79% level at 168.51. Now price might not get up there, but we have a little bit of news coming out at 10:30, so the volatility of the news may just get it up into that zone. So that would be my much more preferred area to look to sell a rally from, okay? It is worth just looking on the 50-minute chart of the whole range. And I do like this area up here, 169, and the 79% fib of the range there, 168.95. That would be a great area to look at because it's a higher area and it's taking in the whole decline over the last day and a half, but the market will need to start to maybe qualify which range it's working in. That's the most immediate range, I think, but we could be looking to the higher range. All right, Euro pound. That's what I was mapping out the other day. So it has come back down to one of the zones I was looking at, this 85.75 level. Let's go to the daily. That level is coming from an area of old. It's a bit hidden by all this price action, but it's just an area the market was respecting, struggling at some time ago. 85.75. And we have a range here that the market's been operating in most recently, and what the 62 to 79% level there. So it's getting some form of intraday support there at the moment. And to the 15-minute. Already seeing here some form of trend line break on the support area here. You can see yesterday that line of support held 1, 2, 3 times, spiked down when the news or something came out here. I think this is actually getting close to the end of the trading day at New York. So this could be when we had rollover time, but in any event, that area has been tested a number of times in holding. It's holding here in the London session, so we could well be getting a reversal from that area of support. So you just need to decide, what is your viewpoint on the Euro pound? Do you think we're at support or right at 62% level at the moment of the range? You need a bit more information. You could wait for maybe a much nicer reversal candle forming from that level to the upside and then make a decision. But we could well be pulling back within this range at the moment to this area to move back up. All right, pound dollar. My day chart look here at the moment. This is last month's high here. Let me just, that's the range of last month. Now, by the end of last week, we were down here somewhere, looking rather negative that we'd failed at 79% of the range. But of course, CPI news and PPI news from the US has moved this up to starting just to fail just ahead of last month's high. So this could be the high of this month. We can often fail just ahead of the high of the month before. So think of this as that's the candle of last month. We're trading back up inside that candle. This month's candle could form, that could be the high of this month, and then we could put a candle down like so for this month. And we just traded back up inside the range of last month, and then we trade down all the way back down to form the low of the month. We're only in the middle of the month, so we've still got half the month to go. So whilst a lot of traders may think, you know, the candle of the month may be forming like so, because, you know, we're all bullish and we're going to break above here and continue up. Well, maybe we're going to stall here and then we're going to, you know, continue down for the month. So like the euro dollar could stall where it is, so could the pound at the moment. Now, again, if we get a reversal candle here, you can see there's two candles. Let me just get rid of that block. There's two candles here that rejected that level just there to form the high last month, 126.83. If we can't close above that level today, then it definitely opens up the question. We false broke that high last month here, rejected it twice. If we get the same price action starting to form here this month, then it begs the question, are we failing here to come back down or all the way back down the range? All right. So for our chart, still an uptrend, but like I was saying on the euro dollar, if we do finish negative today, I'm not going to be buying up. You know, if we start to move up, I'm not going to be buying in this sell zone, because I should have been buying before then. I should have been, if I'm bullish, I should have got into a long trade ahead of this area to see where the price can break above it. I'm not going to buy in this area. So either I'm taking profits on a trade that I'm long, or I'm holding my trade to see if we can move through, or I'm looking for an opportunity for a reversal down. So if we come down, close down today, and then come back up and retest tomorrow and fail, then I would look for an opportunity to get short. So I need some more price action to form at the moment. Like I was saying on the euro dollar, there's a bit of an imbalance. There's a bit of imbalance in here that needs to maybe get filled from the news the other day. Bit of an imbalance in here. What's left is just there. All right. So price will often come back into the imbalance. There's one there. We had one in here on that candle, but then price came back down to fill it. But we haven't filled this one in here. So it is worth noting we created an imbalance last month over here. All right. Filled it a little bit here, came up and filled most of it here, came down. I thought we were starting to move down, but no, price wanted to come up to completely fill the imbalance. All right. So when price was down here, a lot of traders would think we're never coming back up to this area, but we came back up to the area to fill the imbalance. So there's an imbalance here. There's actually an imbalance over here from the previous month to the downside. From the downside, you know. So if I can get that to draw properly, there's an imbalance there that needs to be potentially filled. So this would be a great area to see a reversal to come down to fill this imbalance and that imbalance. So can we start to see structure change on the 4-hour chart over the coming days to tell that tale that we need to get ready to look for an opportunity to get short. Pound yen. Let's get rid of my drawings. All right, so saying on Tuesday, looking for structure to change to the downside. I would be looking on this pair for a rally now on this 4-hour range to the downside. To the 15. I'm just going to go back to my 4-hour because 79%, there's a 79% level I've got in there from this range here. Let me just get rid of that bigger range. This range, there's a 79% level there, and as I move it down to the 15-minute chart, there's a central pivot point. This looks like the high of the day at the moment. This area here. So can you see it's set up to get short in this area? Can you see a trend line break occurring? Is that the high of the day? Well, we don't have a trend line break yet, but we'll wait and see what comes over the next half an hour. All right, Aussie yen. Let's go to my 4-hour chart. I'm going to my daily chart. Been looking for this to come up and start to show maybe a turnover to the downside. This is a lower top maybe forming up here. We're at the 79% level after we had that big decline in that week. All right, we've turned the structure here down. Once we failed at the 79, get my line tool to work. Once we failed at the 79, we've had a rally, drop, we're doing another rally, and we're going to come down. So I think we're around about 62% of that little range at the moment. Draw the fib in. You see there, we're at 62 now. On the bigger scale, all right, we've moved down. We've rallied to the 79. Are we coming down to the larger 127 extension of this high to low? All right, so we're in the early turnaround phase at the top at the moment. So this is obviously the area to get in for a long-term move down if that's what's going to happen. All right, so the 15-minute chart, we're just at the 62. I would actually like it to come up to 79% because we have the central pivot just below it at 103.47. There's a 79% level at 103.51, and today's projected high comes in the same area there. So that would be my desired area for the market to come into. Just because if we do the range for the day, we're stretched. 79% level is often where we fail, and of course there's a central pivot point there as well, which is often where we'll put the high in for the day if we're in a strong downtrend intraday, which we've been in. So it doesn't have to get up to that area, but that would be the area that would watch later in the day when the US news comes out, see if we can get a volatility spike up there. All right, Aussie, that's the day chart. Now back middle of April, this was the low of the year. This is the high of the year up here. And of course, the US news has meant that this double top that I was looking at has gotten broken because the US news has gotten driven through there at the moment. But this whole area that we've taken out a number of highs here on that candle, 1, 2, 3, 4. So that would be we'll go to that highest one to the left there. That's probably the resistance zone because we could say this area is covering these two highs. But question for the market will be this zone that I've just colored in. Can the market now hold above that area? Because if we close below this area, let me just put a line in on this high, 66.48. If we can't hold above 66.48 over the next couple of days, we could be dealing with a reversal back down and a false break. And what I also noticed is, so this is the high of the year. fact, I think that was the high. That's not the high. That was the last high point from the. We rallied up at the end of the year. That wasn't the high of last year. High of last year was up here. So let's just. So that was the high of last year to the low. See how we came up a little bit beyond 62, and then we've been all the way down. So this is the current high of the year, and this is the current low of the year at the moment. All right. Now you can see of the range of last year's, we're at the 50% level. Range for this year at the moment is high to low, and you're going to see that we have a 62% level there. All right, so not too dissimilar to what you saw over here. That was the high to low of the year, came just beyond the 62 and then started to sell off. Then of this range this year, are we failing at the 62 area? Slightly above, are we failing to hold above to move down once more? Just because we're above these highs here, right? Look at the price action here last year. We went above these highs. Went above all these highs over here. Rough drawing. People would have thought, oh, we're going higher, higher, higher. And in fact, in that area at the time, I can just move this fib. We had this range. High, low, 62%. We took out all the stops above these highs, went up, came straight back down. Double tops, straight back down. So we could get, this move up here is exactly the same as this move up here. And what happened? We came all the way back down. So I'm not getting too excited that we're going north another 300 pips at the moment. I'd be starting to watch to see if we're going to deal with another false break like we had over here. All right, so going to see what the day brings. Do we get a nice reversal candle today? Do we start to come back below 66, 67? Maybe we could even get back below 66.48. What we have done today is false broke 6,700. Now we may come back up to retest 6,700. That could be a good area to watch for a reversal if you haven't already got short up there. All right, so job figures today from the Aussie. Job figures went up. What I mean there is unemployment went up. So that is taking off the table maybe the need for the RBA to raise interest rates anymore. So that doesn't really sustain the Aussie moving up. So I would actually be watching to see if we're going to see some form of reversal at the moment. So just watching price action. Now, if you're more bullish, the 66, 67 level needs to be holding a support, and you could watch that area for support to look for an intraday trade to trade up. If you're more bullish and you're not long yet. If you're more bearish in this area, I would be waiting at the moment to see if price action can prove the point. Do we start to move below maybe this area? Do we come back up to rally and look for the selling of a rally? We're not holding the close of yesterday anymore. We're not above the close of yesterday now. We're below. We're actually negative for the day. All the pairs to the US dollar, euro dollar, pound dollar, Aussie dollar here, we're negative for the day after yesterday's CPI data. So are we going to see a reversal back down? All right, so you can monitor. Let's drop to the 15. As I said, the 6,700 looks like we haven't traded there for quite a long time, so we may see some selling pressure there once more on a retest. So you could just be watching up there. There's a 62 to 79% area up in that zone. If you're more bullish at the moment, I can see that we're not really wanting to get below the central pivot point today at the moment. So if you're more bullish and you think, okay, we're going to have another 2 or 3 days up on the back of the CPI data, then you could be looking for trend line break to the upside from the central pivot point. All right, but don't trade it in isolation. If all the other pairs to the US dollar are looking rather weak today, there may not be too much upside to the Aussie, especially when we've had the poor job figures coming in today. So most of these pairs to the US dollar, I'm wanting to see what today's candle does. Do we see a significant reversal candle today after yesterday's candle? Right, New Zealand yen. Not that happy with the New Zealand yen at the moment. This is the year I was watching, got a little bit higher than the year I was watching. Whilst this is maybe starting to show a little bit of a topping out process, I'll be a lot happier looking for a short on this pair for topping out if and when, I'll just take that off a moment, we can move below this high here, major monthly high here. It's definitely an area where we could top out at, but at the moment we're above it. So I'd be happier if we were below it and then looking for an opportunity to get short. I'm not that happy about getting long in the area that we're in because we're in a sell zone. We're in a historical sell zone. So you can see even back to 1990 here, highs here, spike through, decline, rally back up to the same zone. So we're in the sell zone historically. So it's not where I want to get long, but I want to see a clear signal that we may be moving to the other side of the market, and I'm not really seeing that at the moment. As the day chart look, if we were getting a close back below 94.04, then I could start to be a little bit more comfortable about looking for a short. I could be comfortable up here, 95.377 if I saw a rejection up there. But we're not there yet, so I'm just watching. Okay. New Zealand dollar. No, actually, I was looking at this 79% area, which was holding, but the CPI data is the thing that's broken as above. So this is the range that we're in at the moment. Now that we've broken above a high, and you can see we've moved to the 79% level. Now, it was very negative last month. It's a bit positive this month at the moment. And I have been looking long term that we had this range down to here. We had this move up to here. I've been looking at this as a whole move down like so. And long term, we may still see that. But of course, at the moment, we're coming back up. So like the other pairs of the euro, I'm wanting to know really, this move up, can it continue up? Or is it just a reaction to the CPI data and we're coming up to the 79% level here to, this range here. Do something like that. All right, so the day trend is up here with the move up on the CPI data. You can see today's candle hit the 79, rejecting. So if we do finish with a rejection candle today, I would definitely want to look at, let's say that candle's just closing now. I know it's not, but let's say it is just for the argument. Then I would want to see price action come back up within the range of that rejection tomorrow. So we've moved down. I would like to see that come back up in the rejection of that candle on a 4-hour chart or intraday to maybe start to top out. We could come back up and retest that 79% level. So the 79% level is at 61.39. But I want to, see what's happening up in this rejection area. What I can see, there was an imbalance in here. that we've come up to fill. All right, you can see. This just proves the point that even though we price is down here, if price gets bullish for a while, it's going to come back to fill the imbalanced area. So the imbalanced area that hadn't got filled came up to double top and then we started to come down. This is the area of imbalance that hadn't been filled, but it's been filled now. So now that we filled it, we could well top out here to come all the way back down. So what, as I've been saying on the other pairs to the US dollar, if we are topping out today, I want to see price come up on the 4-hour chart and fail or some form of retest. If I start to see that, then that would be my signal to drop down to a lower chart time frame to look for a tight entry. Okay, now we don't have that yet, and of course price may just blow straight up and through the high of it's been formed following the CPI data, but we're at back up to selling levels. So I'm just monitoring to see if anything come that way. As I was saying on Tuesday about the yen pairs, I said as they were moving up, I'm waiting to watch to see if they're going to show me a setup to get short. And now they've been turning over the last couple of days and starting to show lower tops and bottoms on the 4-hour chart. So it's the same sort of thing that I'm starting to watch on the pairs to the US dollar. Dollar Canadian. All right, actually moved through an area of support with the CPI data. But it's actually false breaking the lower area of support. Now this is the range of last month, low to high. It's my 4-hour chart. So low to high. Come into the 62.79% area of that, and we're false breaking at the moment this area of support and this low in here. So if that was just closing today, I know we've still got half a day, but if we're closing here, that would be a very good signal to say, okay, well, we maybe are getting support here and we want to get long to move back up the range. This is looking maybe like a false break of support with the news to move back up to the top of the range here at 137.84. Certainly if we close back above 136.31 today, then I think you're starting to look for structure on a lower time frame 4-hour chart and then into a 50-minute chart to looking for an opportunity to get long. Now, if you're much more on the sell side, because I can see that the structure on the 4-hour chart is still down at the moment, you could be drawing a fib from high to low. 62 level overlaps with this area of broken support here. So price may only come up to that level and hold and keep the structure formed to the downside. So you can watch for that. I'd be more inclined, I think, that we may well see this to move above and then look for the pullback to get to the upside. But I might be proven wrong. Maybe that US dollar weakness that we're seeing is going to continue and we're not going to see a false break reversal. All right, so you're going to have to monitor what's going on there. But quite clearly, just back to the day chart. That low as well is a good reference point, 136.09. So around about 136.00, we start to hold, retest and hold at 136.00. You're looking to the upside. Just hang on a minute. Yeah, that's 136.00, and my other line was coming from 136.14. That's that high in here. All right. All right, so this area here, close above that area today. So it's 136.08 to 136.14, this little area here. I'd certainly, if I want to trade this pair, I want to see this come up, might come back down into here. Do we start to see this kind of price action forming? All right, you can monitor that. Dollar franc is back into its support zone that I've had drawn in for at least a couple of weeks. It's looking like it's hitting the buy zone. And it's holding at the moment. This is the day chart. So if this was closing right now, that is a very strong signal that we're holding here to move back up the range. So just watch the day chart at the moment. How do we close today? If we close like so, that's giving you a clear indication that we're going to move back up the range. 24-hour charts, you could look for another retest and hold. So can price come back down into last month's low, around about 89.92, hold to come back up the range. Ranges are very small on dollar franc at the moment, so really all you probably need to do is watch the day chart. If that's how it closes, if you break above the high of that candle in the next trading day, that could be a trigger to get long. So if that was the close of the candle, if we break above the high of that closing candle, stop below, and then we're seeing whether or not price is going to move back up the range. All right, so hopefully you're seeing that all pairs to the US dollar, pairs to the US dollar moving down, and as we're getting into dollar to a currency, they're moving up. Into dollar yen. Dollar yen's doing the same thing here at the moment. It has sold down today, but it's hit an area of support here. And it's a little bit mixed in its form. That's moved down to a lower bottom. Well, it will be if we form a higher bottom here. We don't know how the candle is going to finish, but that's traded down into support. That is actually a lower bottom. We have actually put in a lower top here, but can we, continue, because that's rejecting at the moment, can we continue to have days, days down continually to move through? Or are we holding on support there at 153.58? For our chart now, bouncing off support down there, 153.58, coming back up to 154.78, which is, we're just pinging off support and resistance. There's an old high. There's an old low. So right now it's coming back up to the old high, which can be resistance. So you can certainly watch. Can you see an intraday failure at 154.78 on a 15-minute chart to get an entry? I much prefer to utilize the sell-off range there and look for a rally back up to the 79% level at 156.08, which this area here. So this area old highs, 79% level. Do we come back up to come down? So up there would be the area to watch. There's an imbalance. There's a little imbalance on this drop on the news candle there that the market may want to come in and fill. That would be my preferred area to look for the opportunity to get short on that pair. All right, getting to gold. As I see, you want me to look at Bitcoin? I'll look at that after this. Gold. So gold back into a clear uptrend. That was the area I was watching the other day. Right, so day trend is up. It's a fresh high on this move in any event. Probably need to wait for a pullback from this low up to wherever this tops out at. Of course, you don't want to be buying into this area, even though it's moving up, because we might not want to move above the area. So you want to be at break even by that point. So the first high there is at 24.17. I'll drop to the 4-hour chart and look at all right, back to the 4-hour chart. I'll look at that range. 62 to 79% area, look for a dip. Now, if that price keeps moving up, keep dragging the fib up. But at the moment, that would be the area that would watch. So that's 23.56 down to 23.45 for support. You can see from previous price actions, support was coming in there on that pullback at that time. So if price was to revisit, you got that low area there that formed before. That would be a good area to watch for more support. Look to the left. You can see this area here too. So that's why that got support there, because of this area here. So that's the area to watch for a dip. And this is the area to be careful of course, because that's where we created this reversal back down from. So that's what I'd look for there on gold. AUUSD, BTC you want me to look at? I haven't looked at that for a while, so I've got no idea what's going really on with that. All right, Bitcoin. Strong for the month. Is coming back up to well on the weekly we're lower top, lower bottom. So has it topped out? False broke that high over there because the weekly trend's down. Day trend's up. I don't know what you're trying to do. Are you long or are you short, or are you looking to go short or looking to go long? But trend is up on the daily at the moment. Trend on the weekly is down. Trend on the monthly is up. We're going with the most immediate trend. The trend is up here. But I'd be very wary of, that's the weekly high, weekly lower top to weekly lower bottom. I'd be very careful at that 68927 level and the 79% level at 69217. Most immediately, it's overextended on the 4-hour chart. So if I wanted to get long, I would need to start to monitor the 4-hour range for a pullback. These highs here, 62% level could be a good area to watch for that to pull back to. So, all right, so you're long. I don't know where you're long at, but I wouldn't want to get long just where we are because there's some resistance here. I want to get long on a pullback. But if you're long from lower down, of course, the danger zones, well, we're coming into a danger zone right now because you've got these 4-hour highs there and you're at the 62% level of the weekly range. So back to the weekly chart. So you're actually coming up to, there's a minor weekly top here. So you're coming up to a previous area where we just managed to have a week up and then we came down. So that's the danger at the moment, is that weekly high at 67,227 and the 62% level. All right, it's in a bit of a dangerous area there where if it doesn't, all right, so you're looking to get long, but you're not yet long. Well, if you're looking to get long, like I was saying on the 4-hour chart, it's always a safer option to look for a dip because that's overextended at the moment. So I would look for a dip to that area, see what happens there. Now, of course, I know these digital currencies can be very volatile and they don't have to dip, but you don't want to get caught at the top of a move, so, and have the fear of missing out. It's always better to miss it out and not be buying at the top of a move than buying at the top of a move and being wrong. All right, so you can look for a dip, but you know, we're in a very, if the weekly downtrend is going to remain in force now, you're kind of buying at the top of the rally point here, really, I think. I know the monthly trend is up, but it's going to take a long, you know, if we are going to move down because the weekly trend is down, it's going to take a long time for the monthly trend to turn down. Well, it might not turn down, it might just be a very long-term correction. So, yeah, as you're saying, look for a pullback. All right, everybody. So the big question is in the market at the moment is yesterday's CPI data move up. Let's go back to the euro dollar. Has it come to an end? Because we've traded up to some sell zones on these pairs to the US dollar, or are we going to continue? So we'll have to wait and see what the next few days brings. We do have the US claims numbers coming out for the 10:30 p.m. unemployment claims. So I know last week the number was quite poor, so that created more US dollar weakness. So there's a potential for another weak figure maybe coming in, and that could drive price back up again for a continued move up. We'll have to wait and see. So be aware of that. Definitely affected the market last week, so it can definitely affect the market this week. All right, other than that, I think I'm going to leave it at that. If you want to join me next week, just head over to the webinar page and you can find my webinars for next week. The page doesn't want to load up at the moment. Just head over to the webinar page at acy.com.au and register your interest if you want to join me next week. My webinars are Tuesday, Wednesday, Thursday, 7 p.m. Sydney time, okay? All right, thanks everybody. Have a great rest of the week. Enjoy your weekend. I look forward to seeing you next time. Thanks everybody.